In the world of high finance, hedge funds are always on the lookout for the next big thing. And right now, that thing is synthetic stocks. But what exactly are they? And how are they being used to game the system? Synthetic stocks are a type of financial instrument that mimics the performance of a real stock, but without actually owning the underlying asset. They're created using complex derivatives and are often used by hedge funds to gain exposure to a particular stock or market without actually buying it. But here's the thing. Synthetic stocks are not just a harmless tool for hedging bets. They can also be used to manipulate the market, creating a false sense of demand for a particular stock and driving up its price. And that's exactly what's happening right now, with devastating consequences. The synthetic stock market is estimated to be worth over $270 billion, with hedge funds using them to game the system and make huge profits. But as the market becomes increasingly volatile, the risks of a catastrophic collapse are growing by the day. We've seen it before. The collapse of Lehman Brothers, the flash crash of 2010, the COVID-19 market meltdown. And each time, synthetic stocks have played a role. But this time, it's different. This time, the stakes are higher, and the consequences of a collapse could be catastrophic. The use of synthetic stocks by hedge funds is creating a systemic risk that threatens the entire financial market. If the bubble bursts, it could take down not just the stock market, but the entire economy. So what can be done to prevent this disaster? Regulators are starting to take notice, but their efforts may be too little, too late. The horse has already bolted, and the damage may already be done. The hedge funds using synthetic stocks are too big to fail, and their losses could be catastrophic. But who will bail them out when the music stops? The taxpayer? The government? Or will they be left to fend for themselves? The $270 billion black hole of synthetic stocks is a ticking time bomb, waiting to unleash its fury on the financial market. And when it does, the consequences will be devastating. The question is, will we be ready? The next crisis is coming, and it will be fueled by synthetic stocks. The only question is, will we learn from our mistakes, or will we repeat them? The clock is ticking. The $270 billion black hole of synthetic stocks is a reminder that in the world of high finance, nothing is as it seems, and when the music stops, the consequences will be devastating. The question is, will you be ready?